Greetings everyone, thanks for joining me. We'll be talking about what is MakerDao and how Maker makes DeFi available for all. Now, decentralized finance, colloquially known as DeFi, is having a moment. Many DeFi projects are in the works, creating a renewed excitement around Ethereum and the notion that perhaps not every single one of those token sales was a scam. Rune Christensen, CEO of Maker, which is creating a decentralized financial ecosystem starting with a stablecoin pegged to the US dollar, believes that the remainder of 2020 will bring more exciting announcements and product launches in the DeFi space. But today we'll just be talking about Maker. The MakerDao stablecoin DAI is pegged to $1 US, not by holding US dollar reserves in a bank account equivalent to the amount of tokens in the system like the stablecoin Tether, which actually holds more than just dollars, but that's a different story, but rather by holding collateralized assets such as Ethereum, cryptocurrency, and in the future perhaps tokenized real-world assets in a smart contract. Holders can earn on the DAI they own. A decentralized and publicly controlled governance system manages the system's interest rate, which is essentially the cost of generating DAI and the return one gets on their DAI. Quote, "You can directly impact the supply and demand," said Christensen. For instance, if the price of DAI is below $1, then we need to contract the supply. We need to make DAI more scarce, and we need to make it more appealing for people to hold DAI. So the governance process then comes to consensus around making it more appealing to hold DAI. That means the DAI savings rate needs to go up, and we need to make it less appealing to generate DAI because we want to contract the supply. Now, in order to support the DAI price, the system also needs to increase its stability fee, which is the cost of borrowing DAI with collateral or generating DAI through the protocol. Quote, "This way it's kind of a balancing act, where these rates keep changing as long as DAI is not trading close to $1, and then as they change, they push it in the direction of $1. This is how DAI manages to stay stable and pegged to the US dollar over time." The science behind MakerDao is based on basic microeconomics and applied in a novel way on a blockchain. What I found when I designed the MakerDao protocol is that, on the one hand, we need to draw on these basic concepts in microeconomics, like supply and demand, and the fact that if you increase demand for a stablecoin, that should drive the price up. And so you want to increase demand for the stablecoin when the price is below $1. Similarly, if you decrease supply by making it more difficult to generate the coin or make it more expensive to borrow, that will push the price up, said Christensen. You can also do the opposite, he says. If the price of the stablecoin is too high, you can actually decrease demand or you can increase supply. Christensen argues there's also some parallels with biochemistry. You can really compare it to homeostasis, he says. If the stablecoin deviates away from $1, there needs to be a response that then brings it back in line and then cuts off that response, so it goes then back to $1. So there's no more change in the rates in the system. While many think the Maker protocol is complicated and that there are many moving parts, Christensen argues that it is rather simple. It is also an elegant mechanism. Quote, "The basic mechanics of how it's controlled and the incentives of people running the governance, which are Maker holders, all come together to create a system that is able to, on the one hand, be fully decentralized and fully transparent without a central authority having some sort of special access to the system, and at the same time, provide the stability that people are used to from the regular banking system and the regular financial system. Heretofore, Maker users have conducted on the platform risky operations around leverage. We're now seeing this even greater group of people come into the system and start using the protocol," he says. Not for this very advanced use case of accessing leverage, but rather just as a stability hedge. If they think that their own currency has too much inflation, or maybe because they want the low risk but still decent yield, the DAI savings rate and DeFi offers. This can be a very appealing financial product to have access to in addition to what they have access to locally. The Maker protocol is designed to ultimately be completely controlled by a decentralized governance process by the Maker holders, separate from the MakerDao Foundation, including the original development team. Quote, "One of the things that's really important is the decentralized governance of the protocol," said Christensen. That the community is able to run it completely on its own, and that the community also has the ability to grow the system as they want to grow it. That includes adding new stablecoins beyond the US dollar. Quote, I would expect that the first one we add in addition to the United States dollar will be the euro, said Christensen. Next comes other major world currencies such as the renminbi and other major Asian currencies. The goal in the long run is for every single currency to be in stablecoin format in the Maker protocol, and potentially assets beyond stablecoins too, such as synthetic assets, including stocks or commodities. Quote, we want to make all of these things available to everyone instead of just to the very few people, relatively speaking, that today have access to the global financial system, while billions of others are left completely on the fringes. In order to make DeFi available to everyone, Maker has long planned multi-collateral DAI, which Christensen calls the full realization of the Maker protocol. The company has been working on it for the past 5 years. Quote, single collateral DAI was really more of an initial version that we decided to create so that we could start testing out what a decentralized stablecoin would look like in practice, said Christensen. And we could allow the ecosystem around the stablecoin to begin forming. But now, with the launch of multi-collateral DAI, we actually have the full system live. That means we can start accessing the full range of features that decentralized finance makes possible. That includes using multiple collateral types. Multi-collateral DAI, according to Christensen, is Maker's main feature, but he also points to other features as also important, including the DAI savings rate. Quote, this is the first time there is a low-risk savings return available in crypto on a USD-denominated stablecoin, he says. And in many ways, the DAI savings rate is actually what's more exciting in the short run, because the multi-collateral feature, while it is the most important, will take a couple of months and even years to fully roll out. The system currently has the capability to support any number of collateral types in the long run. Quote, today it actually only supports 2 collateral types, Ethereum and then the Ethereum-based token called Basic Attention Token, or BAT for short, BAT, which was founded by Brendan Eich, the creator of JavaScript, a high-level programming language. Once multi-collateral DAI becomes reality and the community and the ecosystem around the protocol has grown, Maker will be ready to take the next step. Quote, what's going to start happening is a lot more new assets are going to be onboarded, and that will include all the different Ethereum-based tokens and cross-chain assets like Bitcoin, said Christensen. What's most exciting is that it will also start to include Ethereum-based tokenized real-world assets that will be brought onto the Ethereum blockchain and then used as collateral in the Maker protocol. It will be possible to use things like gold and real estate as well, says Christensen. Quote, tokenized gold in, let's say, a vault in Singapore, for instance, or real estate in America where the deed is tokenized, and that token is then used as collateral in order to get a low-rate loan from a decentralized protocol, or even do things like trade finance. Small businesses can access the blockchain in order to get a direct line of credit that's based on their invoices, which are then tokenized. The Maker Foundation is focusing on researching, experimenting with, and testing new uses of the system. Quote, it is running trials and practice around how you deal with things like compliance and regulation around this stuff, and reconcile that we are trying to bring real-world regulated assets into an ultimately authority-less decentralized protocol, and how to reconcile those two things, said Christensen. It is possible. We've done a lot of very successful trials with different companies from all around the world that have been tokenizing various assets and then done test runs, essentially, where we simulated what it would look like to use those assets on as collateral on Maker, and then calculated how much money they would save in terms of the interest rates they have to pay to the banks. Financial assets, as we know them today, and the financial markets as we know them, will likely be tokenized over time, because of the inherent efficiency of the blockchain, believes Christensen. Quote, that's just the beginning. And when you go beyond that, there's going to be a new wave of innovation that's difficult to even predict. But that certainly is going to turn the financial system on its head and inject this value and the advantages of blockchain technology. Christensen doesn't think that DeFi will replace the current financial system. To some extent, the financial system, the banks, the institutions, and the government will commercially adopt DeFi and embrace it, using it to improve their own efficiency, transparency, and compliance. Either way, there's going to be a lot of disruption and creative destruction. Quote, it's really going to be all based around this dynamic of, at some point, the existing system will realize that whoever moves first and who actually learns how to harness this technology and how to use it to provide better services will get a massive advantage in the market. Tether is used for facilitating crypto liquidity and crypto speculation, for instance. Import-export businesses are using it too, bolstering a grassroots adoption of crypto across the world, and not just for speculation. Yet there's no way to get a return on your Tether. The DAI stablecoin in the Maker protocol provides something unique. Quote, it's already very popular for people around the world to purchase DAI and then lend it out to other people around the world through these decentralized finance dApps, which have become very developed recently. While Christensen sees the centralized products and decentralized products as complementary, over the past year, Maker and the broader movement of decentralized finance has moved beyond centralized stablecoins. Now, DeFi combines the stability of traditional financial systems and the self-sovereignty, security, and transparency of blockchain while supporting financial globalization. Quote, the blockchain allows for things like leapfrogging technological stages in the areas where the financial systems aren't so developed, said Christensen. Things like connecting the unbanked with the global capital markets and all of these things. It's just going to unlock so much and such tremendous wealth that I don't think that the incumbent financial players, or at least not all of them, will miss this opportunity. A lot of them will jump on the bandwagon and to some extent actually be the ones moving it forward. In December, the Maker Foundation had sold $27.5 million worth of Maker, its native utility token and governance token, as well as recapitalization resource on the Maker system, to VC funds, Dragonfly Capital Partners, and Paradigm. Christensen sees Asia as an important market for DeFi. He sees decentralized application development gaining steam, particularly in Asia. This is really the right time to start focusing even more on this region and then really try to accelerate the growth and interest that's already happening there, he said. Once they are interested in something, they really get interested and they really get behind the technology, but they typically want to see that validation happen from the Western markets first. Maker's path into China has now come into view. Quote, it can be very difficult if you're just coming from the outside and don't really understand what it means when the regulatory landscape is constantly changing, said Christensen. We are very well equipped to navigate the regulation, but ultimately it is just a part of accessing the incredibly huge market that China is. Christensen has conducted prior business in China, though in an industry other than blockchain. One of the main things I learned from my time in China, he says, is that it can be very, very difficult to enter China and do sustainable business there as an outsider. You really need to have those insider connections. You really need that local understanding and that inside view, and also the recognition and familiarity, because in fact, that is really how markets work, and especially emerging markets. But China is very unique in the sense that it makes such a massive difference. So MakerDao knew from the start that Asia would be an important market for its success. They even wanted to initially focus on the region. The name for its stablecoin DAI, which is backed by a capitalized decentralized credit system, is a Chinese word meaning, quote, to write capital for a loan. The project ultimately decided to first focus on the West, including Latin America. Ever since, MakerDao has pondered the right time to enter Asia, and as we've said, it's now. MakerDao tweeted earlier this year that the Maker Foundation had sold $27.5 million worth of Maker, the utility token, governance token, and recapitalization resource of the Maker system. Quote, the mission of the MakerDao products and the Maker Foundation is to create an unbiased currency for the world, which of course means for everyone all across the world, said Christensen. A large portion of all the people in the world live in Asia, but if you look at crypto industry and how it's evolving right now, it is actually really centered around Asia as the hub when it comes to infrastructure and interests of regular people into crypto. For Maker Foundation, it is important that the project has a strong presence with well-connected and knowledgeable partners, for China is a central player in the blockchain market. Quote, it's really the country that, other than the US essentially, is like running the entire crypto space when it comes to things like trading volume and just really adopting and actually using the real life new technologies that are possible with blockchain. This was known even in the early days of Bitcoin, which got really big once it started gaining traction in China, says Christensen. It was very sudden and massive escalation of interest. That's how technology is adopted in Asia versus the more organic growth that happens in the West. Christensen actually moved to China when he was 18 years old and later had a small business there for a couple of years. His wife is Chinese and he speaks the language. I actually have a very close personal relationship with China, specifically, he said. MakerDao already had a presence in China, as most of the traffic to certain user interfaces in the Maker protocols come from the country. MakerDAO's China lead, Chao Pan, is one of the company's oldest employees, and he's also very popular in the Chinese crypto community. They call him Teacher Chao. Quote, "For about a year now, we've already had people on the ground in China, South Korea, Japan, and Singapore, which we see as some of the most important centers for the crypto industry in Asia. When Dragonfly, a cross-border crypto asset investment firm, came to the project, MakerDAO had just launched multi-collateral DAI functionality. Christensen calls it the most important upgrade that they had done yet to the system. Maker Foundation receives a lot of inquiries about parties interested in buying the limited supply of Maker tokens. Quote, "We are really not looking to sell it to just anyone," said Christensen. "What's very important for us is to find partners that actually believe in the project long term and actually want to contribute to the vision of a decentralized financial system, rather than just buying some tokens to speculate on the value or something like that. The project therefore spends a lot of time vetting potential partners. Quote, "After having been in talks with Dragonfly and Paradigm for a very long time, we decided that they were in fact the real deal, and they had what it would take for us to make this kind of partnership successful, as well as our push into Asia, where we'd be able to navigate all of the challenges. Partnering with Dragonfly gives the project access to connections and insider knowledge to help MakerDAO navigate the new jurisdictions and cultures. The next step for Maker is to build on top of its base in Asia through more partners and more integration with technology. The appetite is there," says Christensen. MakerDAO partnered with OKX, one of the largest exchanges in China and Asia, on the DAI savings rate, a new feature of the DAI stablecoin. Users get a low-risk return on their crypto. When a user's DAI is in the savings rate contract, the Maker protocol automatically allocated DAI equal to the variable savings rate. Quote, "When you look at something like our integration of DAI and the DAI savings rate on the OKX platform, that should really drive a lot more users on the DAI demand side, a lot more stablecoin users into the protocol," said Christensen. This could then mean that because there's more demand for the stablecoin coming from the market, the response by the governance of the protocol might be to reduce the rates in the system and also make it cheaper to generate DAI, so that this new demand can be met with the token supply on the system. And so, I think that MakerDAO kind of really sort of distinguishes itself from Tether because of this decentralized dynamic. And I think that this is going to displace projects such as Tether moving into the future, and why there will eventually be competition even for Maker when it comes to these decentralized stablecoins, or really any sort of asset that's based on a basket of assets. And I find this system that they developed unique, although there have been certain points during which the price of MakerDAO has divorced from its $1 USD peg, such as in March. In March, both Tether and MakerDAO divorced from $1 as the markets fell across the board. So that's something to keep in mind and keep an eye on during these times of real high volatility in the markets, of which I think that we're going to see plenty more of. So as there's more demand for the stablecoin coming from the market, the response by the governance of the protocol might be to reduce the rates in the system and make it cheaper to generate DAI, so that this new demand can be met with new DAI. So that system then ensures that the price stays stable at around $1. Another Asia-based integration partner, IamToken, is one of the most popular Ethereum wallets in China. Christensen credits the wallet with driving a lot of users to the MakerDAO protocol over the past year. The MakerDAO founder said the biggest challenge the company faces is an opaque Chinese regulatory environment. As an example, a couple of months ago, there was this big proclamation that the blockchain is a new thing and China wants to lead it, said Christensen. And then a few months later, there's a crackdown and there's crypto exchanges having to delist coins and a lot of exchanges shutting down. This is the history of Bitcoin and blockchain in China. Quote, says Christensen, "There's even a joke." Before reciting it, he says, "Every 3 months, China bans Bitcoin in the space." And it's basically because the regulatory environment is constantly in flux. Thanks for joining us today on What is MakerDAO, and have a great night.